Gives me great pleasure now to bring on board Vijay Shekhar Sharma, VSS, from Davos to talk about the mood point at Davos, PAyTm stock price, growth, global tech, a lot of things happening there. VSS, so nice to connect with you. While I'm in Mumbai, in a warm studio, it's chilly, it's cold, and it's snowing in Davos, I can see. But what I want to ask you, VSS, is that what's the mood point in Davos this year? When I speak to folks who are at Davos, some are worried about inflation, some are worried about recession, and those who are not worried about are worried about growth in general.
I think one thing Davos is telling is that world looks up to India as the next growth engine in a dramatically more serious way than we could have thought in sitting in India. In other words, thanks to the recession, to the every other problem that world is going through, we've had a resilient economy. We've had an economy that does not go through the risk of recession. So my belief here is that it is proving on this street, the promenade of Davos, WEF in 23, that we are clearly the country, we are clearly the economy the world is looking up to. It's up to us as a country, it's up to us as people, how much of international investments, how much of international economy, companies we can bring to our country. I think this is an opportunity. Investments or the countries, both are for us to grab.
VSS, is the world looking at technology stocks differently? Global tech stocks have seen a rout. The big tech companies are in a mode of not hiring but layoff. Interest rates are moving higher and growth stocks are getting punished. Do you think we are in for a rough patch for global tech companies and for global tech stocks?
Well, I think as you can very well see that there was a lot of quote-unquote free money that was accessible to the market and companies, and so they built their business models or investment plans based on the cost of capital, which was dramatically lower. And when the inflation has come back, interest rates have come back in US, the growth or the obligation to invest for growth has come down. Now, technology companies traditionally have been that we will put the money in the next venture, next investment cycle, next need, next product or next side of things, which is exactly the stock market has resetted, saying that, well, here we are, we believe that cost of capital is underestimated by yourself. You rather should build a business model or build a business which is generating free cash and preserving the money, or not like investing in risk capital as much it used to be. So I'd say that technology investments have gone through from a dramatically resilient to a very risk-averse state. And that is why the stock or the public markets have resetted the valuations, including all the biggest guys in the world, as you can see that. In my opinion, what good thing that us as PAyTm we've been able to do is that we have not set our business model based on the cost of capital, or we've not set our business model based on the interest rate cycles or so on and so forth. We are here with very clear understanding of customers who are on our platform. We have become dramatically prudent about spending money, whether it is about customer acquisition, marketing, or it about expanding the platform by signing up merchants. We are actually respecting and valuing customers who have revenue visibility, profit visibility in our cycle. And that gives us an opportunity as PAyTm specifically, which is your question on 2023, that we believe that we will grow our business revenues in a growth manner because we are coming from a small base, so equivalent of a growth economy company, and we will also be able to generate good profits, free cash flow. In fact, in next few quarters, we believe that we would be able to bring up all this because that we have had a focus on the execution, which is led by revenue and profitability focus. So Nikunj, I believe that global technology companies are going through the reset because their capital access has resetted, while as far as India is concerned, capital access was never of this kind of free flow.
So VSS, the fact that PAyTm has announced a buyback and you are in the middle of a buyback, what was the temptation here to announce the buyback? Was it to support the stock price, or the cash usage now is some kind of an indication that PAyTm, in order to grow, does not need that kind of an cash?
I don't think that as a management we have any control over stock price. And I say this very often to our retail people whom I meet in the street, and I also say this on television or retail analysts, that look, the best thing that we can do is we can disclose more, we can detail out more, we can do more interaction, and even better thing that we can do is that we build a company that generates profit. Because the biggest overhang on PAyTm have been whether this company can make money or not. In my opinion, in last 12 months, I salute and respect my team who came together to build an opportunity for us to generate revenues that are quality revenues, profits that we are, if you see the losses that have started dramatically reducing, and we believe that we will be able to deliver profit much before our guideline. Now, that being the case here, in my opinion, buyback was intended to signal the message that, look, we have capital, but the amount of capital we need, because we are not capex-centric company and we are not going to put money or equity into M&As or so on in seeable future that we have seen. So this is the capital we believe could be used for a better, prudent use by in a open market buying shares, and whoever wants to sell can sell, and we would take that as an opportunity for our capital to become useful for us in a much better way than sitting idle in a treasury or some other place. So the message was led by that we do not need capital, not by that we have any stock price influence to do. In fact, if you notice, we've been buying, the stock price hasn't moved much needle actually, which is, in other words, we are not here to influence stock price any which ways.
So VSS, from a high of 2022 to the low of 2022, it's been a fall of about 65% for the PAyTm stock. Does that bother you? Does that worry you? Nobody wants stock price to go down, but are you worried about it? Do you get a wrinkle, so to speak?
Personally, as a chairman and CEO, my job is to give incredible returns to our shareholders, build a company which is long-term successful, and build a company that is long-term resilient. I can tell you that Priority has been long-term resilient and successful company which generates profit, free cash, and we are executing on that. As far as stock market is concerned, only one thing that I've learned is that it has many more variables, not just company performance. It could be global, it could be local, it could be industry sector, sector specific, and so on and so forth, that could define the price. So I mean, as an individual, I do not like it. I mean, who would like it as a promoter or a person who's built this company or the founder of this company, CEO of this company. At the same time, we also know that wider market has a pricing influence, not some set of individual or set of companies could decide by themselves.
So VSS, I don't want to get this one wrong for our viewers and for your shareholders. I'm going to take a leap from your earlier answer. You did mention about the break-even point. Now, in the public domain, what you've said is that you will reach a break-even, an EBITDA break-even in September 2023. That's next financial year. When you're saying that you're likely to reach your break-even earlier, are we looking at PAyTm becoming EBITDA positive that in the first quarter of the next financial year itself? Because that's going to be a big breakthrough for PAyTm.
Because I am not going to give the number of the month or quarter, but I can tell that September 2023, which we've given guideline for EBITDA before ESOP cost, we will definitely be able to beat it by significant high pre-results. And it has been possible because the estimation of how payment will make money, whether the subscription product will take off or not, estimation of how credit will perform, the portfolio and many other things, our partners based on which they give us money. All those things have come out great supporting numbers to us to tell that we will be able to deliver profitability way before September 2023. Obviously, you will see this quarter's number coming very soon, and hopefully by that time the picture, that word that I'm saying, would get far more clearer.
There's also a challenge in terms of the supply which is coming to the market. Two of your largest investors, SoftBank and Alibaba, they've been selling in the market. So while incrementally as the chairman and the CEO, you're trying to fix the business in terms of the trajectory where it is moving, and that's quite commendable. But for minority shareholder, the challenge is that you got two large investors who are ready to sell, and there is a huge supply which is really coming up.
I think these all shareholders do not talk to us, do not discuss their selling strategy. In fact, let me also help you. Both SoftBank and Alibaba did not have any board representation or any strategic relationship with us for last more than 2 years, which is effectively is the reason that they probably one point in time or other would have wanted to sell certain equity and take the cash from the table. But I can only say that every investor is now free share. At the same point of time, what we've seen is what we believe that is why they were very conservative about even board seats, etc., which they had a right on. So SoftBank had a right on board seat, which they did not have it for more than a year. And like I said, that Alibaba has never been a strategic shareholder for us, so they also sold. And as a management, I can tell that we get to know once the block has hit the market, and block is, we get to know who's the seller. They end from the exchanges.
So let's understand about the credit business. The credit business is one of the highest growth business for PAyTm as we speak. In the credit business, your MDR is very high. It's about 4% plus. Could that run into some kind of a regulatory overhang?
I think our margins are growing because of the subscription product, Nikunj. The subscription and the payment business that we've been able to discover, and then the commerce business that we've been able to discover. Those are the things that are driving the margin. And as far as the commerce line item, so credit line item is concerned, it is significantly technology led. I mean, the team is not even 100 people. So you're here talking about a very small team. COGS of that team, standalone, if I was to put up exactly on that, is much less. So that is why it shows up the improvement in bottom line shorter term. So I think the business model is a technology business model. It's not capex or large number of people requirement business model. Our number of people that we deploy is around acquiring merchant and expanding the platform in the merchant network. Now that is where we have continued to keep the investments, and we've said that we have sort of reached our number that we want to reach there in number of people basis, not dramatic large increase. And that is why our almost all the revenue that gets netted comes towards the bottom line.
DSS, I'd like to also draw your attention to the international business. You have a presence in Japan. The technology in terms of UPI is now becoming more like a global technology. Your technology is widely accepted. Are you getting ready to take a giant leap forward in terms of taking PAyTm global? Is that the next growth frontier you could be exploring?
Yeah, so PAyTm QR is what UPI QR inherited. So PAyTm's QR became the nation's QR, and now UPI with many other stakeholders. We're very proud of participating in this Asian economy of India, and PCI has done a tremendous good job, and I'm so happy that together with them we do so much of incredible amount of inclusion and innovation on payments. When it comes to the rest of the world, what we are seeing is there are payment and credit combination with commerce is incredibly at an influx movement in our country. Now, international always remains an opportunity to look at it, but not for us in next foreseeable future. I mean, I would rather say that if we even would have thought earlier that sometime we will go international, right now the opportunity is hami hasto.
So PAyTm will be profitable in 2024. What is that PAyTm is doing differently, and how will VSS and his team ensure that growth does not get compromised while your path to profitability will be achieved in 2024? What is that you're doing differently?
Simple thing. Earlier, when we used to line item wise make money, we would expand another line item of business. Right now, what we are saying is that the core business now has dramatic profitable opportunity. Earlier, we were not sure whether payment will make that much of money. We were not sure whether credit will be accepted by people at a scale that we are looking at it. And now that we've seen it, we are saying that, we don't need to discover newer frontiers to make newer money. We need to actually expand in the core business. That's why. So I'd say that we would continue to invest in newer businesses, but earlier we would go to even newer business. Like, let's say we did try food delivery business, by the way, at a very small number of time. We partnered with Zomato that time. But now we're like, we don't need to do this. Our partners are doing it. As in, commerce is a good job done by our partners. Let's participate and expand that. Versus now we're saying that payment and credit, which earlier was not sure of whether it'll generate that much amount of contribution margins, profit or not, we are expanding on that. And subscription, Nikunj, imagine a shopkeeper who does not pay for MDR, UPI MDR, which is subvention by government. will that person pay or not? I mean, it was not possible before COVID. So COVID has dramatically changed and expanded our business model. In last 2 years, what has happened is what we as PAyTmers, me as entrepreneur, would have not expected. I mean, it's a quantum leap in business model that we see.
Well, VSS, so nice to have you from Davos. While it's quite warm and cozy here, I can see it was snowing there. And I look forward to meet you very soon for a warm cup of coffee next time you are in Mumbai. Enjoy your stay and thank you for joining us.
Thank you. Good to see you.